Hey guys, so Paycom is one of the smallest and newest positions in my flagship portfolio, and the stock has been completely obliterated in the past couple of days since it's reported earnings. But I think that has more to do with what it says and what investors think is going to happen in the US economy more broadly than it does for the company on an individual basis. So, to take a deeper look at it, we can see that the stock has dropped from about $259 just a couple of days ago to now being down to $162, as you can see here on this screen, on the Fast Graphs platform that we analyze companies on. And it was down even further. It was down to, I believe, 150 after earnings a couple of days ago. But when you look at the earnings call and we listen to the earnings call, I should say, the results weren't that bad. Paycom is still growing; it's one of the fastest growing companies out there. But to understand why the stock is down, you have to understand what Paycom does. So Paycom is an HR solutions company. So they take care of everything HR related from the time of onboarding um, staff members to doing payroll right up to the point of retirement and handling retirement functions. And so it makes it very simple for employers to manage their staff. And the earning results really weren't that bad. The company is still very profitable. It is still growing at a pretty decent clip. However, what spooked investors is that the Paycom board projected or forecasted earnings of only 10% for 2024. I'm saying only, but a 10% growth rate is pretty good for most companies. But when you consider that historically, Paycom has been growing by over 20% for the past um, almost 8, 9, 10 years now, that speaks to possibly a slowdown in hiring and in the economy in the US more broadly. So, a number of persons have been predicting a slowdown and even a recession in the US economy. And you never really know when you're in a recession, possibly until it's well on its way and until it's irrefutable. And being on the cutting edge, on the leading edge, a leading indicator into the employment space, a lot of persons are thinking that Paycom predicting this slowdown in the job market may be one of the early signs of a recession in 2024. And so they've taken preventative action and actually bailing out of the stock. And so that's why we saw that precipitous downfall uh, in this share price. Now, this may possibly be due to um, competition, although I highly doubt it, from other companies which offer similar services. Um, but the prospect of a slowdown really is spooking investors, and it remains to be seen whether that will come to fruition. But as it means for us investors, is that this may actually be an opportunity to buy even more stock. Again, this is one of the smallest positions in my portfolio, and I may consider nibbling at it a little bit more. And of course, I'm not advising that you do so. I think you should do your own diligence and see if now is a time to start nibbling at the stocks given this steep drop in price. Because as you can see, as we look at the screen, the price to earnings ratio of Paycom right now is at $22 at 22 to 1 PTE ratio, and at the not too long ago it was over 124x the PTE ratio. So as you can see now, the company is a lot cheaper than it was at its height, at $547, which was just under 2 years ago. But as you can see down here at the earnings, it's actually way more profitable now than it was 2 years ago. But the price is um, about a quarter of what it once was. So, guys, if you're interested in Paycom, if you're interested in investing, check out more at Serial Business Group, as we've helped lead you through the whole journey of wealth building. And look out for more videos soon.